Good morning and welcome. How's everyone doing today? Nice to see you guys. Morning, Dwight. Morning, Ron. It was funny, Ron. We were walking through Frisco and I saw the sign for chili dogs, and I didn't have my phone. I told my wife, I was like, "Hey, go grab a picture of that. I got to send it to Ron." Then I forgot to give it to you yesterday. So good stuff. How's everyone doing today? Everybody avoid news. Didn't get caught in that craziness. Does everybody do that? Good morning, Debbie. Part of your morning routine, showing up at forexfactory.com, making sure that you don't trade into news. Ah, glad to hear that, Wander. You guys know, for you Apex traders, if you jump in at news, that's a violation. They will shut you down. So knowing what's happening isn't as important as knowing when it's happening. Good morning, Snorri. Hope you're doing well today. Today is Wednesday, October 11th, and at 8:30 a.m., guys, the core PPI came out, and it was a mover. It dropped the Nasdaq a lot, dropped the S&P a little bit. I was in the perfect S&P trade for about 40 minutes, and they were just waiting for news. Had to exit before news, made a couple ticks, and then it dropped huge. And now it looks like it's on its way to finishing. But each and every morning, guys, I'm checking this out and I'm just making sure that I'm not trading into something that can create a reaction, something that can make the market move sideways. We do have, whoops, let me go back to it. We do have medium impact at 10:15, guys. Somebody set your timer. 2 p.m., there's going to be minutes. It's high impact. Watching for these oranges and reds, guys. Set an alarm on your phone. Do whatever you need to do to make sure that you know when it's happening. And then everything that I talk about comes from the education page. For those of you that have been with me more than a day, you're going to realize that I really do truly say the same thing every day. Good morning, Charles. Good morning, Bobby. Nice to see you guys. Um, I'm a firm believer that repetition creates recognition. I'm a firm believer that doing the same thing correctly over and over and over, it just builds muscle memory. So it's important that you go through that process, that you do what it takes to make everything just recognizable. And the easiest way to do that, and guys, you're going to find that I'm very much a path of least resistance kind of guy, is dedicate your first 20 days with Nexgen, your first 20 trading days to high probability trades, guys, to high probability trend trades. Um, this is a trade that sets up after the market reverses from what we call a termination condition. This is a trade that typically wins 70 to 80% of the time. This is a trade that revolves around advantages. This is a trade when each indicator on every chart agrees with the rules for the trade, guys. This is your 100%. This is your never miss it. This is the foundation of everything that you're going to do from this day forward. And this high probability trend trade gives you a skill set. It turns you into a chart reader. And being a chart reader is just probably one of the best skills that you can have. Because 90% of your day, guys, is reading charts. 90% of your day is just looking at your indicators, taking the information that they're giving you, and then making a decision whether or not you have a statistical advantage to enter a trade. Your rules will help you define that statistical advantage, but your ability to read charts is what's going to make it recognizable. You will be able to, and I say this without hesitation, you will be able to understand where the market is likely to continue with your chart reading. And these are going to be your entries for those high probability trend trades. You're going to understand where the market is likely to go. This is going to give you the ability to have intelligent targets, to be able to use Fibonacci, to be able to use momentum and say, hey, with this much behind it, it's very likely to go to this point. And then you'll understand where the market is likely to stop. And these are what we call termination conditions. This was my biggest challenge in the beginning. I knew where the market was likely to stop because of my chart reading, but I rarely believed it. So these likely to stop areas, you will learn to respect them. Rule number two revolves around likely to stop areas. But knowing where reactions can happen, where buyers may buy, where sellers may sell, where profits may be taken. Next-gen users have this amazing ability to see these areas before we ever get to them, and then you can choose to not trade into them because they may end the trend. And then more importantly, you may choose to take that highest probability trend trade that happens after one. And that is your highest chance of success, guys. Your consistent winning trades, that trade that typically wins 70 to 80% of the time. That's going to be our focus for the first hour. High probability trend trade. Excuse me, I'm a little snuffly today. Um, it's only 3 rules. That's it. It's just 3 rules. Each rule gives you an advantage. The advantage of momentum is established through rule number 1, making sure that you have strong trigger lines. The advantage of a clear path, making sure that there's nothing between you and your targets. That's when we start to avoid those areas likely to stop the morning. Good morning, D-Rock. And then finally, your 3rd rule is going to give you the advantage of having entered the market where it's most likely to continue. All of these advantages revolve around your chart reading. These 3 advantages for the high probability trend trade are going to come to be, whoops, on only 2 charts. Simplicity. What an amazing word. Guys, I try to give you the least amount of things to think about because my brain works better with the least amount of things to think about. We're going to use a large chart. This is going to lead the way. This will be the first thing that we ever look at when we're looking for the high probability trend trade. This is going to be the trade where my first 2 rules, good morning, Chef, must be true, where I must have momentum, where I must have a clear path. Those are the advantages that the first 2 rules provide. What you're going to find is that one bar, the most current bar on your large chart, is going to define direction, it's going to define momentum, and it's also going to define areas. And that is an awful lot of information from only one bar. Once you have that information, once you have those first 2 advantages, rule number 1 providing you the advantage of momentum, rule number 2 providing you that clear path, nothing between you and your targets, this is where you can turn your attention to a smaller, faster chart. And what happens in one bar on that large chart, one singular bar defining direction, momentum, areas, you're going to take the information from inside that bar. And on your smaller, faster chart, it's literally going to be 15 to 30 bars. And this is where you will be able to refine the market all the way down to the point where it's likely to continue. That's rule number 3. Your rules for entry give you the advantage of having entered the market where the market is most likely to continue. So large chart leads the way. Large chart does all the work. Large chart is a reflection of the large crowd, the people that move the market, the people that establish trends, that establish momentum, the people that react to areas. They're going to tell you that it's time to look for an entry. And then we rely on a group of yahoos, a group of people that love to fight momentum, that love to fight trend. And they're going to force a tiny little pullback right to your areas. And guys, this is rule number 3. You will be able to pinpoint where the market is likely to continue and use that spot for entry. So that's our focus for the first hour. Our first hour is 100% learning the trigger line and Fibonacci rules for when it's okay to trade. Being able to visually see these rules. Being able to visually identify momentum, to visually, good morning, Jose, identify a clear path. And then, of course, visually being able to identify the entry area. I go through it, we break it down, we talk about the advantages. While we're doing that, you guys are going to be simulating. You're going to be practicing these rules. And you're going to post pictures in class until you're sure that you're taking the correct rules, guys, because you want to practice like you're going to play. That was always, when I was racing motorcycles, that was the phrase. Don't go out and practice the wrong things. Don't go out at half throttle expecting to be able to perform when the chips are down. So practicing the correct rules, taking the right trades, and if you're not, still posting those in room, getting the feedback so that we can get you towards the right trades. Practicing the wrong trades is one of the most detrimental things that you can do, because what you're doing is you're going to get lucky every now and then. And winning a lucky trade makes you continue to break your rules. But your rules provide a statistical advantage, guys. So we want to focus on the correct rules. We're going to simplify a lot. I mean, we're going to keep it easy, guys. You hear me say a lot. People are like, but Mark, the fib was this, or Mark, the color was that. And I'm always going to resort back to those rules, those three looks that it takes to make a trade. And we're going to keep it super simple. We're going to commit to the high probability trend trade, focusing on the entry for the first 20 days with Nexgen. And you guys have to learn these Fibonacci and trigger looks so that they become easy. And all that said is our segue into the step-by-step path for becoming a confident trader ASAP. This hasn't changed. And as long as I've taught the class, this has always been the recipe for you guys finding success and consistency. And it begins with posting your trades in class. Show me pictures of what you're doing. Tell me why you're doing what you're doing. Tell me what you see, why it made you feel as though there was a trade. Guys, I want you to get in the habit of vandalizing your charts. I want you to tell me your rules. I want you to write them on the chart. I want you to write arrows to your rules being met so that you can associate the rule with a certain look, because it's the patterns that are going to create success. I want you to show me both charts when you're posting in the room, guys. I want you to show me your large chart because it leads the way, and I want you to show me your refinement chart because I want to see where you got in. There's a lot of times where I can help you manage risk. There's a lot of times where I can help you get a better entry than what you were looking at. Make sure that you're showing those entries. Make sure you're showing your exits, guys. You can do that by plotting your executions if you don't want to take the time to draw circles. I'm a big fan of seeing the executions on your chart. Um, and give me as much as you can. Tell me how you felt. Tell me what the advantages were. Use the wording. I had the advantage of momentum. I had the advantage of a clear path. And what you're going to do is you're going to learn how to police yourself. You're going to learn how to assure yourself that you are following the rules, that you are taking these statistical advantages. Um, and then using your spreadsheet. NextGen provided you a spreadsheet. It is in your NextGen Study Picks folder. Excuse me. Um, The first page of your spreadsheet is your trade journal. The first page is where every time you pull the trigger, you put it into that sheet and you talk about what did I see? How did I feel? What type of trade was it? Where was I coming from? And what were the advantages in place, guys? And it's key that you do this. And then under the notes section, whatever feedback you get from what you post in the room, this is a great spot to do it. Maybe you broke rule number 2, or maybe rule number 3 wasn't executed the way it should be. You can take those notes, but the key is when you pour that morning coffee, have a cup of tea, cup of cocoa, whatever makes you happy, wakes you up. Um, Study the previous day's trades. Go back and look at what you did yesterday. What worked? Because obviously we want to repeat the patterns that are bringing us success. What didn't work? Did you fight trend? Did you fight triggers? Did you jump in, right? Did you put your stop right where the market was most likely to continue rather than putting it where the market shouldn't go? So if you were studying yesterday's trades, that's stuff that you can work on today. And then I want you to ask yourself, what felt easy? Trading doesn't have to be stressful. When you're a rules-based trader, you realize that you don't move the market. You realize that your hopes and thoughts have no influence whatsoever. So what feels easy is what you have proven to yourself creates a statistical advantage. That high probability trend trade, if you take a week to study it, you'll feel great about getting in that trade every time. You'll feel great about holding that trade. And then what feels forced typically is when you break the rules, guys. And you're not going to know if you're breaking the rules if you're brand new. You couldn't possibly be expected to. I'm hoping you break all of them because every time you break a rule, every time you make a mistake and you post it in the room, we get to have a conversation. And that little conversation is going to create that recognition. It's going to create that repetition. And it's going to give you the better chance to avoid the mistake later. But this brief historical study each morning, it's going to prepare you for the day. It will accelerate the learning. Guys, this has been proven time and time again, not only in the people that I teach in this room, but in myself. I avoided the spreadsheet like the plague in the beginning. I never tracked my trades. So I couldn't keep track of my progress. I couldn't see what I was doing. I couldn't find those patterns that were costing me. The second page is your favorite looks. So as you grow with the software, as you start to take trades, it's okay to make mistakes. But every time you post in a room and I say something like, Gene, that was the best trade ever, it had every advantage in place, that's high probability trend trade 101. Take that picture, drop it in here, right? Make sure that you can repeat it because the more times you see it, the easier it becomes to catch it in the moment. And then finally, the second page, or this third tab, excuse me, this is what you guys have been doing. This is what you guys show me every day. Taking beautiful trades, embracing advantages. So, guys, this is a great study tool for you to come back and just kind of see what's being done with the software, see what the clients are doing. I even put names next to them so that they get credit, so that it's not just me. But like D-Rock's perfect 50-50 trade. What is that? Well, that's D-Rock showing flawless execution and making money on the way down. So not only has D-Rock put this in his favorite station, I've stolen it and put it in the client's trades because, guys, there's a lot to be learned from that beautiful entry. There's a lot to be learned from the advantages present. And then there's also sections for you guys that feel compelled to trade the NASDAQ. I've got a little bit on my NASDAQ trading in there that I like to share with you guys. As you learn to manage trades, great entries create manageable trades. So every time you take the perfect entry, and we're going to talk about how to nail this entry, there's an opportunity for you to learn how to understand where the market is likely to go, how to hold for those bigger moves. And that's all in that section. There's a lot of chart reading things, talking about divergences, talking about the gap theory, talking about all sorts of stuff. Click through the pictures. If you have questions, take a picture of it, write your question on it. And then the whole section on termination conditions. I changed the name to the Mark Novak section because, guys, this was my weakness in the beginning. This is the pattern that I didn't recognize in myself, and I only overcame it when I started posting in class. And I'm going to tell you right now, my brother taught the class before I did. I took over this class about a year ago, man, maybe 2 years ago, I'm not even sure, so that he could focus on day trading full time, so that he could actually use this software instead of teaching. But he taught this class, and I kept posting trades that were losers. And he finally asked me one day, he goes, Mark, how many times are you going to trade into areas likely to stop the market, hoping that they break and letting it cost you money? And it clicked. And I filled up my termination condition section, probably 300 to 400, 500 pictures, and I annotated every chart. And the first thing that I looked for was terminations because that was my pattern. Guys, we will recognize your patterns. We will give you things to work on, things to focus on, and areas to improve with your chart reading, but you have to post your trades and you have to do the study, guys. I firmly believe, without question, no hesitation, Nexgen is giving you the best software ever. You just have to learn to use it, right? I can give you $1,000 hammer, but if you don't learn how to swing it, you're never going to build a house. Or give you the fastest car in the world, but if you don't know how to drive it, you're just going to put it into a tree. So, guys, learn how to use the tools, right? Focus on simplicity. 3 rules, 2 charts. All it takes is 3 advantages to make a trade. That's it. We're going to look for momentum, a clear path, in an entry area. And we're going to do that right now. We're going to take information from the resource materials. We are going to look at a lot of pictures. If you need me to post links to pictures, let me know. I'm always happy to share them. But we're going to start with rule number 1 that says that we must have strong triggers. And in order to have strong triggers, you have to be trading with the trend. There's no way around it. Which is fantastic because if you commit to rule number 1, you will never fight the trend. You will never fight strong triggers. And it's pretty simple, guys. If the background on your large chart, remember, we're looking at the large chart first. If the background is green, you're in an uptrend. And if you're in an uptrend, you should only be looking for rules to be met for high probability trend trades long. And if the background on your large chart is red, you're in a downtrend and you're only looking for rules to be met for high probability trend trade short. And guys, this is how easy identifying trend is. Goodness gracious. I've got a lot open. Background's red on the S&P, guys. We're in a downtrend. That's it. I'm only looking for rules to be met for high probability trend trade short. Background is red on crude oil, only looking for rules to be met for high probability trend trade short. And the background is red on the NASDAQ, only looking for rules to be met for high probability trend trade short. The idea of going long should never even enter my mind when my background is red. So that's the first advantage you can give yourself. But rule number one is the one that's necessary to begin looking for a trade, guys. And rule number one says that you must have strong trigger lines. In order to have strong trigger lines, the small triggers, these solid lines, must break above the large triggers, these dashed lines. That's what paints your background green. That's what lets you know that you're in an uptrend. But strong trigger lines means that there's a separation between the small and the large. And this gap between small and large in the uptrend here, notice that the small triggers are wide and they're angled in the direction of the trend, and the large triggers are wide, they're angled in the direction of the trend. See how as they roll, they're flat, they're lifeless, no momentum, and the wider they get, the stronger the push. That space between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that you're going to hear in class all day long, guys. Odds favorable momentum leads the way. Odds favorable momentum will help cover some mistakes. Odds favorable momentum should be the first thing that you look for each and every day. In a downtrend, it's the exact same thing, guys. Small triggers are down, they're wide. Large triggers are down, they're wide. And it's the separation between the two. It's like scissors opening to cut, right? The alligator opening its mouth so that it can chomp down. It's that separation that lets me know that the odds are favorable for the market to continue in the direction of the trend. When we have odds favorable momentum on the large chart, that's the best of the best look, the most favorable look for either buying pullbacks to Fibonacci support on a smaller, faster chart, that refinement tool, or selling pullbacks to Fibonacci resistance on a smaller, faster chart. On a large chart, you'll never see that pullback happen. It's a slow-moving one-bar event. But when the market finally continues in the direction of the trend, you're going to notice these wicks or these tails on the large chart. We're not trading the tails, but you will be able to identify through a smaller, faster chart, through a refinement chart, exactly where this tail is most likely to establish itself, exactly where this tail is most likely to happen. And it happens most often with odds favorable momentum. So guys, that's rule number one, strong triggers. Give me a Y in the room if you're good with this, especially if you're brand new. Dave's trading, Freddie, Anthony, Ivan. Guys, pretty easy, right? Visually, this is your look. And what's the other side? So Charles, you're adding rules, right? If you have odds favorable momentum, the market's likely to continue in the direction of the trend, right? Your midband is the color of the midband is nothing more than a reflection of where price is. And let me show you. It's if price is below the midband's magenta. If price is above it, the midband is green. That's it. There's odds favorable momentum in a green background with a magenta band, right? Because we're coming into the midband. Does that make sense? So we're going to gauge the momentum. Yeah, and we'll talk about midbands and when they may stop the market. I love your questions because these are what everybody's wondering, and you're taking the time to type it out. So thank you for that. But Charles, when we talk about rules, what you'll notice, I hope you'll notice, is that none of my rules refer to the colors of the midbands. None of my rules even refer to the color of a Fibonacci area. They're there to help you color code a little bit to keep it simple. Green means up, but the rules are designed to embrace pretty simple looks, right? Odds favorable momentum. This is rule number one. That's strong triggers. The flip side is when the small triggers fall inside of the large triggers, well, now we've weakened the triggers. It's the opposite of strong. We go from odds favorable to anything can happen. So when you talk about momentum, don't let anything else cloud your judgment. Look for separation between the small and the large, wide, and the angle of the trend. Know that the advantage is present. And if you don't see this look, know that you don't have advantage of momentum, no matter what any of the other indicators tell you. And this is my rule number one picture. I like to share this one because it reminds you that 90% of what you're doing is reading charts. 90% is waiting for advantages, guys. And if you start on the left side, odds favorable momentum pushes this market down. And then we get weekend triggers. Anything can happen, ACH, right? You'll see me annotate charts with that every now and then. Anything can happen triggers, and it precedes a reversal. Typically, there's Fibonacci areas down here, but because we're only talking about momentum, I've removed the mid bands. I've removed the fibs. I've gotten rid of the yellow one-to-ones and any of the divergences because we're only focused on whether or not the market has momentum. From this reversal, it provides us odds favorable. With that odds favorable, guys, there's one of those tails, one of those potential pullbacks on a smaller, faster chart, getting next-gen users into their highest probability trend trade. The momentum carries it up all the way to those anything can happen triggers. And once again, we see the market reverse when those triggers are weakened, when anything can happen up or down. Pushes us right into odds favorable momentum again. Once again, there's one of those tails. There's actually a couple of them. Excuse me. And that momentum pushes it down. And then we come into really probably one of my favorite parts about Nexgen. Um, if you keep it simple, if you embrace the idea that it takes three advantages to enter a trade, you'll never get chewed up in that consolidation that we see a lot of people get chewed up in. You'll never get chewed up in a market that isn't trending. Because what you'll find is that the large triggers are down and the small triggers are up, meaning that you do not have odds favorable momentum. It also means that if the small and large triggers are down but your trend is up, it's impossible to have odds favorable momentum because trigger lines must be wide and angled in the direction of the trend. And you'll see this indecision. Buyers and sellers fighting it out. The people that control the market fighting it out. This is the trading equivalent of Holyfield and Tyson in the middle of the ring, duking it out. And if you think you're going to step in between them and make them change their mind, you're sorely mistaken. You're probably going to get knocked out, right? So next gen users just sit on their hands here. And they say, hey, I don't have the advantage of momentum. There's nothing to do. I'm not going to get run over 3 or 4 times trying to predict what the market will do. Somebody's going to win that fight. It may be. Weak triggers, Charles. He won't talk about it in interviews, but I have my suspicions. And then eventually somebody wins, right? And there's that odds favorable momentum. So guys, 90% of your day is spent waiting for advantages. 90% of your day is waiting for the advantage of momentum. And then once you have it, you need to make sure that we're not reaching one of those areas likely to stop the market. Termination conditions false. That's rule number 2. Termination conditions false. Room to your profit target. Well, that means that you have a clear path. So if I've got ground shaking momentum and absolutely nothing in the way, it stands to reason that that market's going to continue in the direction of the trade. The areas that may stop the market. Divergence high and low lines. Red Fibonacci resistance, blue Fibonacci support. These yellow one-to-ones. These can all stop the market in their tracks. Excuse me, one second. Sorry about that, guys. Fighting a little bit of allergies here. Welcome back to Texas, right? These areas are where decisions happen. These areas are where if the buyers are pushing everything up with momentum and they reach these yellow one-to-ones, they have to make a decision. Are they going to take profits? And then the flip side of that is there may be a horde of sellers waiting right at that key Fibonacci area to push the market down. Guys, when we reach these areas, we have to make decisions as well. We have to determine whether or not we want to stay in a trade, whether we want to take a next trade. And sometimes our best approach is simply to wait, to see what the reaction is, and then make our decisions and look for our advantages after the reaction. So rule number 2 is going to teach us to recognize these areas. Um, and then it's going to be up to you to make the decision on whether or not you're willing to trade into them. And I'm going to show you the simple recipe for determining whether or not one of these lines is a termination condition or if we've regained a clear path. And everything begins with price reaching an area, meaning that your dynamic Rinko bars, guys, these bars that reflect price, have made their way to a Fibonacci area, whether it's Fibonacci resistance or support. This is on your large chart. In this case, your dynamic Rinko bars reached Fibonacci resistance. Somebody's going to make a decision most likely at this area, whether it's buyers taking profits off or sellers entering trades, guys. So if price reaches the area and absolutely none of your trigger lines, small or large, have gotten to the other side of it, you've reached what we call a termination condition. You've reached an area that may stop the market. This is your giant waving red flag to pump the brakes, to say, wait a second, let's see what happens. It's either going to break, it's going to create a world of conflict where the market goes sideways, or it's going to reverse. And when it breaks, meaning that both the small and the large triggers get to the other side of the area in question, resistance begins to act as support. The area is broken. The path is now clear until we reach another key area. Notice that here the path is broken and the momentum is its strongest. And there's one of those little tails, a potential entry to get you guys into the market on a smaller, faster chart to take advantage of that momentum in a clear path. So when I go to the user guide and I go to tops and bottoms, guys, we're going to look at a couple different pictures, but the recipe never changes. The first thing that happens is price reaches the area. Those dynamic Rinko bars reach the area. It's that arrival that gets people making their decisions. That's where those orders get filled. That's where those profits get taken. When price reaches the area, simply ask yourself, where are my trigger lines? In this case, all of your trigger lines remain above the area of support. Therefore, no more short trades into this area. We either need to let it break, both trigger lines break through, or the market needs to reverse. All of my trigger lines will roll. But look at the size of the bar that comes off of that key area. This would knock each and every one of you out of the perfect looking short trade because you traded into an area that may stop the market. Up here it happens at support, and then both your small and large triggers get to the other side of support, meaning that it's broken, the path is clear. Notice that it happens with odds favorable momentum, and I'll be darned, there's one of those tails. And notice at the top of that tail happens right at Fibonacci resistance that's been broken, and the market continues down to the next key area. Guys, this is the simple recipe for termination conditions. Price reaches, where are my triggers? And it happens on all of those lines on the large chart. This is a divergence line. It prints off of a pivot when there's a loss of momentum. That's all divergence means, guys. Loss of momentum. And this line will extend to the right until it's no longer needed, until the rules have been satisfied that it's no longer a challenge. This is not a termination condition. This is nothing more than a loss of momentum. From this loss of momentum, the market pushes up. The buyers fight a little bit. And the sellers are rarely done in one swoop, guys, and they push right back. It's when price, these dynamic Rinko bars, reach that divergence low. Nexgen users ask themselves, where are the trigger lines? If all the trigger lines remain above this blue divergence line, the cyan divergence line, it's acting as a termination condition. We call this termination condition a pivot stop out. This is your pivot. When price reaches the line it creates and none of the triggers can break, we now have a pivot stop out. This is a termination condition. If this termination condition creates a full reversal in the market, meaning that my large triggers go from red to green, my small triggers get to the business side of those large triggers, giving me odds favorable, Guys, this is what we call a strong bottom, and a strong bottom is the precursor for the highest probability trend trade that you can take. These pivot stop outs carry a lot of weight in the market. This cyan line is just a line in the sand where the buyer said, triple dog dare you. We already stole your momentum. We're going to unload if you come back to it. That's why we don't trade into them. And then this is your picture that reminds you that 90% of your day is spent reading indicators. 10% is going to be taking trades, guys. And I'm going to go through this a little quicker. Dynamic Renko bars push up and come in contact with Fibonacci resistance. Hey, PFI. Where are my triggers? They remain below resistance. Therefore, there are no long trades into this red line. Nexgen users, you didn't lose any money because that market pushed all the way back down to Fibonacci support. And when it did, all you had to do was ask yourself, where on earth are my trigger lines? Guys, they're all the way up here. They didn't even follow, letting me know that Fibonacci support is likely to stop the market. I'm not taking trades. I just know that I need to wait for the advantages. From support, the buyers push them right back up, guys, and they reach Fibonacci resistance. The triggers remain below. That's a termination condition. Reaches this divergence high line, and the triggers remain below. That's two, one on top of the other. And then it hits the second resistance line, and all the triggers remain below. Guys, that's three termination conditions in the same location. That's powerful. That's three separate areas saying don't go long. This termination gives us a full reversal. This full reversal gives me odds favorable. This odds favorable gives me one of those tails with a clear path. This is your 90%, guys. Right here, 90% waiting for the clear path coupled with the odds favorable momentum. This is your 10%. This is where that itchy trigger finger gets to do something. This is your highest chance of success, guys. This is a trade that typically wins 70 to 80% of the time. A high probability trend trade that happens immediately after a termination is your best chance of success. A termination at a high that reverses the market, we're going to call it a strong top or a good top. And then one more picture. I draw a lot of arrows. And guys, all of these pictures are sitting still, right? So you've got to study them so that you can recognize them in the moment. But look what happens. The sellers are in control. The momentum is its absolute strongest. Everything says down. And these yellow one-to-ones have been hit. While the rest of the world is hoping that it continues down, you guys are saying all my triggers are above it. I'm going to sit on my hands for a second and see what the reaction is. Because I don't know. And I'm not in control, but I do know that I no longer have a clear path. Guys, there were buyers just sitting there, and look how hard they push off that bottom. Everybody that went short got stopped out. And then the sellers in control tried to get through it again, and they couldn't get there. And the buyers fought back, and the sellers fought back, and the buyers fought back, and the sellers fought back. There's your 90%, guys. No clear advantage. Looking at this insane fight between buyers and sellers that you didn't have to get caught up in. Eventually, the buyers win. Both small and large triggers get above that red Fibonacci resistance, letting me know that it's broken. The small triggers get outside of the large triggers, letting me know that I have momentum. Price hasn't reached any key areas. And there's one of those pullbacks, guys. So once again, this is your 90%. This is where you make the decision to not predict. This is your 10%. This is where the advantages are in place. And guys, look at the results. Straight to Fibonacci resistance. This is your best chance, guys. Understanding termination conditions and choosing not to trade into them. Give me a Y in the room if you're with me, if you feel comfortable with this concept, guys. Here they are at highs. Price reaches that divergence line. No triggers, no trade. Resistance, no triggers through, no trade. One-to-ones and resistance, no triggers through. No trades. Save this one. Put it in your spreadsheet. That's a good one, guys. This was my weak point initially as a brand new trader. Here they are at a low. It's the exact same thing. Freddie, that's on you, brother. It's because you don't trust the rules yet, and that's okay. Remember, guys, I teach you to read the indicators, right? You're going to recognize patterns through your practice. Freddie, your pattern right now is jumping the gun early, isn't it? That's okay. We've identified it. So now I know exactly what you and I get to work on every time you post a picture, making sure that you're in at the right spot. But first, let's make sure that we're not hitting those termination conditions, that the path is in fact clear. Because it's a huge advantage, guys. It's a huge advantage having absolutely nothing in your way. There's a couple pictures, terminations at lows, terminations at highs. Um, and if we go back to the live market, look at this. Price reached Fibonacci support and absolutely no trigger lines broke through, pushing the market all the way up to Fibonacci or to this divergence high line. Absolutely no trigger lines broke through. Next-gen users didn't have to take trades into these areas that didn't have an advantage. And notice how with one bar, price reached. No triggers, guys. Not looking for long trades. Here's crude oil. Price reached Fibonacci resistance. Absolutely none of the trigger lines are capable of breaking through. There's a lot of mess happening in between. No reason to get caught in that, guys. Patience. And here we get a full retracement back to Fibonacci resistance. All the trigger lines remain below. Guys, look what the market's doing off that termination condition. But Mark, my fib was blue. I don't have any rules that talk about the color of the fib, guys. Price reaches Fibonacci resistance. Absolutely no trigger lines break. No more long trades. Look what the market did. Price pulls all the way back to Fibonacci support. The triggers don't even follow. And it finishes the move. Guys, this is termination conditions, 100%. This is putting you in a position to never have to guess, to always understand not only where the market's likely to stop, but if you do get momentum in a clear path, identifying through Fibonacci where the market is likely to go. I love termination conditions because I sucked at them for quite a while, guys, until I scrolled back and started taking pictures. Let's do that. This is the S&P. Take a shape and go just like this. And use your words, guys. Use the words price reached an area, no triggers broke. This is a term. And I want you to type this on your charts. And I want you to take that arrow. Why do I want you to do this? To give you busy work? No. Because I want you to visually see exactly what it looks like when you reach areas that may stop the market, because this is going to keep you safe. This is going to keep you out of a lot of iffy trades. Take that picture, right? And when you take that picture, bring it to your spreadsheet. Oh, I thought I finished it. That's okay. Drop it into your termination condition section. Reinforce those great rules, guys. Then I'm going to give you one more termination condition. This is not a large chart termination condition. This is very much a small chart, the only small chart termination condition. And it's going to help you identify change that you can't see on that big slow moving chart. So sometimes the large chart is cruising with odds favorable momentum and it just turns. And sometimes it's flying to the downside with a clear path and it just turns. This final termination condition you will see on a smaller, faster chart. And it is 3 divergences in the same price range, 3 losses of momentum in the same price range, evidenced by 3 cyan lines that have printed from a low or 3 magenta lines that have printed from a high. When you get these 3 losses of momentum in the same price range, it may terminate the trend. Guys, if you notice how Nexgen uses the wordage, it may terminate the trend, likely to stop, likely to continue. Nothing is in absolutes because you don't control the market. We don't control the market. We trade patterns that create advantages. Three divergences may stop that trend. It becomes even more powerful with anything can happen triggers. And it becomes even more powerful still if you see that third pivot higher than the lowest from a low or higher than the highest from a high. This is a head and shoulders pattern. This look at a low and this look at a high will help you predict change on the large chart. It'll help you see these areas that you can't see on the slower moving. It's also going to become an outstanding management tool for you. If you're in the perfect trade and three divergences print in the direction of your trade, guys, this is a big red flag. Get out, preserve your equity, get your money. Wait for the next best opportunity. So three divergences happens all the time, guys. Look at that. There's that pivot stop out. There's three divergences, four divergences in the same price range, right where the market turned. And if you back up, you probably see it even more. Multiple divergences, higher pivot, right? Helping you identify change in the market that you can't see on a slower moving time frame. That's a lot of divergences, but we're still waiting for that odds favorable momentum. So guys, give me a Y in the room if you're good on terminations. The recipe never changes. First, price reaches the area, and then you ask about the triggers. Guys, if price hasn't reached the area, it's not a termination condition. It's a target. It's where the market's likely to go. And you're going to use that in determining profit taking. So let's find our entry. Let's say what we have so far. Large chart had strong trigger lines. You have the advantage of momentum. Large chart had no termination conditions. You had the advantage of a clear path. So now we're going to turn our attention to the smaller chart, the faster chart, the refinement chart. And rule number 3 says that you're going to use a limit order, meaning that you're literally going to wait for the market to come to you. Guys, that's how precise we're going to be. And you're going to use a limit order to buy or sell a pullback. Do you guys remember that little retracement in price that the small crowd forces when the large crowd says everything's going up with nothing in the way? We rely on the small crowd to do this because they're going to give us a pullback, a small retracement in price. And that small retracement in price needs to be at an area inside of favorable large triggers. So we're going to take the advantages on the large chart. We're going to refine them on a small chart. We're going to pinpoint where the market is likely to continue. And guys, that point is going to be a line. It's going to be an area inside of favorable large triggers. So I'm going to define favorable large triggers first, guys, because this is the look that gives you the smallest amount of risk. And that's really what new users want. They don't want to feel a lot of heat for very long. Favorable large triggers means that on your small chart, the large and the synthetic are wide and angled in the direction of the trend. That's a must-have, not flat and lifeless. They also should be overlapping one another. They should be one on top of the other like a couple snakes riding piggyback. When you have this favorable large triggers, notice that they're acting as one. This is your best of the best, guys. This is going to create your smallest window of opportunity. This is going to give you the least amount of risk in a trade. So Freddie, what we're going to work on with you is waiting for the market to come back to that best of the best area, getting you in with the least amount of risk. And that ability to do it is just going to come through repetition, through trust. So when the first two advantages are in place, guys, when we have momentum and absolutely nothing in the way, this should be the look on your smaller, faster chart. There are not, Charles, your synthetic triggers on your small chart are the large triggers from your large chart. So they've just been transposed over because what we found is that when these line up, when your large and synthetic line up and areas fall within them, this becomes your best chance for earning the market where it's most likely to continue. So everything is up with that momentum. Everything is up with that clear path. You have strong triggers on the small chart. You have favorable large triggers on the small chart. You're going to identify fibs, mid-bands, yellow 1-to-1s because these are the lines that create a bounce. These are like solid brick wall and you have a tennis ball and you're going to chuck it as hard as you can. and it's going to create a bounce. Guys, that's what the areas behave as. But we need that small crowd to force a pullback. We need that market to come back to us, to get us to our best of the best entry, because that's where the risk is the least. That's where the profit potential becomes the highest. And it begins with a reversal bar. It begins with this red bar after all of those green bars. This is the beginning of the pullback, guys. This is where we're going to find our window of opportunity, that point where the market is most likely to continue. When I'm looking for long trades, my window of opportunity is going to extend from the highest point of support to the lowest point of support inside a favorable large trigger. So you'll notice from the top of the large triggers, and then the synthetic create the bottom. This is where I'm looking for lines. The lines must be below the highest point of the triggers and above the lowest point of the triggers. And when they fall inside of this area, from the highest point of support closest to price and the lowest point of support, guys, this is where the market is most likely to continue. This is where the market is most likely to bounce in the direction of the trend with all that momentum. This is where Nexgen users embrace rule number 3, and they will activate a limit order, a tick or two above that area of support inside of favorable large triggers. This becomes your entry for the highest probability trend trade that you can take. This is rule number 3 being met. So when the pullback starts, you're going to identify your triggers, you're going to identify your areas, and you're going to activate a limit order right at the top. And this is where we cease to be in control of anything. We're not in control of whether the market goes up. We're not in control of whether the market goes down. We have absolutely no say whether we win or lose. But what we do is we can identify patterns that are repeatable, that are testable, that have been proven to provide a statistical advantage. And it starts with odds favorable momentum on the large chart. And then it's coupled with a clear path on the large chart. When those two are present, Nexgen users make the decision that it's time to enter the market. You go to their small chart and you wait patiently for a reversal bar. At the time of the reversal bar, from the highest point of the triggers to the lowest point of the triggers is where I'm looking for areas. This isn't where my trade originates. From the highest point of support to the lowest point of support becomes the window of opportunity, becomes that point where the market is most likely to continue. Can you guys give me a why in the room? If you're comfortable with the concept, even if you know you can't catch it live, but we wait for a reversal. We look for our areas inside of favorable large triggers, and guys, this is where our advantages lie. And that market is going to push down very often. And I want you to see something. It pushes up before it hits my limit order at the top of that window. Don't get scared. If it goes without you, it's not your money. But we don't chase trades. We don't force trades. This is just a little fluctuation on a smaller, faster chart. It ultimately pulls down and hits that limit order support inside of favorable large triggers. You're in a long trade now with the advantage of momentum, a clear path, and having entered where the market was most likely to continue. You identified a window. It may push to the bottom of the window. That's okay. Your rules are still met. Your advantages are still present. Guys, I want you to mentally be ready. You're going to see red. You're going to see red numbers. You're going to see red ticks. You're going to see trades that push against you a little bit but stay in the window. This is where your hands go up. You're powerless. You've given yourself the best of the best, a trade that typically wins 70 to 80% of the time. You knew exactly where it was likely to bounce. And here's one of the great parts is we can manage our risk before we ever manage our profits. And we can put a stop outside of the window of opportunity. We can be there with a catcher's mitt. And if for some reason that small crowd has more giddy up and the market pushes outside of the place where it's most likely to continue, Nexgen users, you're going to manage your risk and you're going to exit the trade and you're going to take a loser. And that's okay. And you're like, but Mark, if I take losers, here's the deal. The high probability trend trade typically wins 70 to 80% of the time, which means that you're mathematically obligated to lose 2 to 3 of every 10 trades that you take, and you don't get to pick which ones they are. The market doesn't care if you've already taken 2 losers. The market doesn't care if you have to pay rent, if your mortgage is due, if your car needs a new muffler. The market doesn't care. The market's going to do what the market does. Guys, this is your best of the best, and this is where it's no longer worth risking money, and that's where we exit the trade. This is your high probability trend trade, guys. This is the trade that you need to, over the first 20 days, learn how to identify the entry point, study it, trust it, and never miss it, because this is the trade that typically wins 70 to 80% of the time. Once this trade moves in the direction of the overall trend, you can reduce your risk from outside of that window of opportunity to below that reversal bar where the market shouldn't go. Because you waited for the pullback, your risk is its absolute least. Because you waited for the pullback, the distance to your profit target is its absolute most. So you need to study for 20 days, guys. Get used to the idea that you're going to buy the market on its way down, or that you're going to sell the market on its way up. And when you have odds favorable momentum, when you have absolutely no termination conditions, I want you to see this. Where was it earlier? You will take the best of the best entry. I'm looking to see if we have a rules met entry. This is crude oil. Let's just circle this tail here and see what it did. Odds favorable, smalls have broken through, meaning that that area does have the potential to break. Let's just see what the pullback looked like. Directly to resistance inside of favorable large triggers, guys. This is what we call a 50-50 trade. Your small triggers have broken the area, but your large triggers have not. This area has the potential to break. Look at the momentum. Remember when I said that momentum is going to fix things? Look at the strength in the market as those small triggers smash through. There was a little pullback, but that little pullback was right to resistance, right inside of those favorable large triggers, and the momentum carries the market down. You're going to see this every day, guys, and we're going to talk about the best way to take that trade. A lot of indecision in the market today. Let's look at the same one right here. Let's circle this tail with all that momentum. And is it possible that it pulled back to an area of resistance inside of favorable large triggers? Oh, it didn't make it. This would be not my money. Guys, if it doesn't get me in at the best spot, I'm not going to chase it, because when you chase trades, they become unmanageable. Right into those one-to-ones. So guys, this is your first 20 days, high probability trend trades, focusing on nothing more than entries. I'm going to give you some tools now. Here's a checklist that reminds you of the rules. Print it out, put it on your desk as you're looking for these high probability trend trades, or even more importantly, as you're scrolling back and you're looking for these rules to be met, and you're looking to take pictures of your two charts historically, creating recognition. Is the market coming from a good top or bottom, from a termination condition that creates a full reversal? Guys, I'm going to give you the hyperlink that's on there. If you struggle with termination conditions, go watch this tops and bottoms video. It's going to create a lot of clarity. Did you have odds favorable momentum on both charts? It's asking you if your rules were met. So guys, this is the same thing that you should write on your charts. And if you do, go to the next step. No termination conditions, no areas likely to stop the market. And if it's a yes, then you're going to look for that area inside of favorable large triggers on your smaller, faster chart. I've never had anybody in the history of the checklist give me 4 yeses and do less than 70%, guys. Here's the exact same checklist, but we've liberated materials from the resources, right? We've liberated the pictures of what a good bottom is, what a termination that creates a full reversal looks like. You know exactly what odds favorable momentum looks like, and you know exactly what anything can happen triggers look like. You should be studying this each morning before you start trading. Termination conditions. No triggers through, no clear path. Sit on your hands. Both triggers through, the path is clear. Giddy up. And I even added in this one, when those small triggers break through with odds favorable momentum, areas break. They have the potential to break. But they're not broken yet, which means the path isn't clear, which means rule number 2 hasn't been met. And then finally, guys, little diagrams of finding your window of opportunity from the point of the reversal bar, identifying your triggers, the areas within, and reminding you that the areas outside of the trigger lines don't fit in the window of opportunity. Guys, this is a great study each and every morning. If you will commit 20 days to finding high probability trend trades, guys, look at that. 1, 2, 3, 4 divergences in the same price range may terminate the trend. It may push it higher. And sure enough, it's pushing it higher. If you commit to entries for 20 days, if you commit to getting in at the absolute best of the best spot. So Freddie, as you're learning not to jump in, your commitment is to holding for that area inside of favorable large triggers, win, lose, or draw, and not worrying about anything other than trusting the process. One easy way to trust it is go look at 260 pictures of Nexgen users. Let's just click one. You ready? Paul's perfect trend trade short has odds favorable momentum. It has absolutely nothing in the way. And I want you to look at that entry. Pull back to resistance inside of favorable large triggers. How many of these pictures do you suppose you could look at until you really started to believe it? That's on you, guys. There is no magic number. But I'm telling you that recognition creates repetition. Having a plan in place is going to make it easier. Having a plan in place is going to pull the emotion out, right? You can keep it mechanical. You can keep it pragmatic. You can keep it focused. I'm going to give you guys what's called the KISS trading plan, the Keep It Simple Sunshine trading plan. I've watched brand new users use this plan and get funded in their Apex accounts. I've watched brand new users follow this plan and find a tremendous amount of success. And then I've also watched people about 30 days in abandon everything that they learned in the KISS plan because they needed to be smarter, they needed more. They got tired of 70% winners and they wanted to be active instead of profitable. Very common for new users. There's some sort of psychological hitch in us that says we want all of the apples. You know, it's the old parable. The dog has a bone in his mouth, totally content, walks up to the river's edge, looks in, sees a dog with a bone, barks at him because he wants that other bone as well, loses his in the river, guys. This is what new traders do all the time. I'm going to give you a plan that's designed to optimize your chances of success with a high probability trend trade in one of those 50-50 trades where the areas are likely to break. It's all of us, Dwight. The only people that don't do it, there are none. I've never met one. I've never met somebody that isn't a little bit greedy. So why not give yourself a statistical advantage, right? Why not put yourself in a position to win more than you lose? Fuel that greed. And guys, this is a stepping stone. This is designed just to optimize, to give you the best chance of success as you become a chart reader, to give you the best chance of success as you learn what's comfortable for you. I've had traders that struggle seeing short trades. They can't wrap their brain around selling something that they've never owned, right? And as a result, they only take long trades, and it's okay because that's their trade. We have traders that embrace momentum and clear path, but refuse to wait for a pullback. They just take tiny little snippets with all that momentum. Again, it's perfectly okay. That's their trade. And that may be your trade one day, but until it is, keep it simple. Take the one that's been proven to give you the best chance of success, guys. And then through your simulation, through your study, through class feedback and continuous practice, you will craft a plan that's tailored to your personal goals. And it's going to be based on your experience reading the indicators. When you're a chart reader, you'll be able to create your plan. Until you're capable of creating your plan, I'm giving you one for consistency. And it starts with never fighting the large chart, guys. Don't fight the direction, don't fight the triggers. If that large chart says up, get all thoughts of short out of your mind. And if the large chart says down, get all thoughts of longs out of your mind. This is going to eliminate about 70% of the mistakes that new users typically make, that opinionated people make. I know, I've been one, right? And all you're doing is defining your entry. That's it. Define your entry. Here's the advantages from the checklist, guys. All you've done is defined your entry. This is the first step, the first piece of the puzzle. Because once you get in at the right spot, trades become manageable. Once you get in at the right spot, your risk is reduced. Your profit potential grows. So your mechanical plan or your management plan should be mechanical as a brand new user as you're learning to read your indicators. The same way you rely on a checklist to get you in, you're going to rely on a checklist to manage the trade. And it all revolves around the perfect entry. It all revolves around the high probability trend trade entry. That area inside of favorable large triggers, understanding where the market is most likely to continue. Once you're in, your initial stop goes right where the market shouldn't go, right at that point outside of the window of opportunity. Um, and you're powerless at this point, and that's hard for a lot of people to accept. There's only two potential scenarios here, guys. The first one is that your stop gets hit. And if your stop gets hit, it's okay. You had the advantage of momentum. You had the advantage of a clear path. You had the advantage of having entered the market at the area where it's most likely to continue, right? You had a stop right where the market shouldn't go. And losses are a normal part of a positive equity curve. I don't know anybody that doesn't take losses. So either your stop gets hit or the market gives you one of those magnificent reversal bars, letting you know we're going to start heading in the direction of the trend. We're going to go the same way momentum's going. We are going to embrace that clear path and see if we can't truck it down to the next key area. This reversal bar becomes your opportunity to reduce risk. It's nothing more than if then. If I get a reversal bar, then I'll reduce risk. Not if I get nervous, I'll tighten my stop. If I'm afraid of losing, I'll put the stop where it doesn't belong so that I don't lose. If I get a reversal bar, then my stop goes 2 ticks above it or 2 ticks below it if we're going long. And at this point, once again, our hands go in the air. We roll back 6 feet from the monitor. There's nothing for you to do. You're either going to take that small loser, totally cool, learn to accept it, or the market's going to hit your first target, guys. And your first target is strategically placed at $100 with this KISS plan. Because when you have odds favorable momentum, when you have a clear path, you're going to find that this target gets hit an awful lot. $100 doesn't feel like a lot of money to some people, right? It's just $100. I spent more than that on dinner last night. That's totally cool. But as a new day trader, $100 means that you just won. It means that you're successful. And you're creating confidence through the memory of success. You just got paid, and they can't take that from you. It's in your account. And you're going to move your stop to break even, guys. And once again, you're going to sit on your hands. I think so too, D-Rock. You're going to sit on your hands because now you have nothing to lose. Now you're excited because you just got paid, right? And it's not that $100 is the goal of every trade. And I'm going to tell you right now that break-even stop will get hit a lot as you learn to read your indicators. That's okay. Because getting stopped out break-even doesn't sting. It doesn't hurt at all, right? It's like a good night handshake after the perfect date rather than getting a smooch on the lips. You're still cool. Had a good time. It's all right. Who knows? Maybe the next one will be better. But it breeds trust. It gets you to trust the large chart. It gets you to trust the idea that odds favorable momentum and a clear path gets to that next area. And your next target's only $200 off in the distance, guys. No runners for the new users. No home runs. We're hitting base hits. We're trying to get paid because when we get paid, life seems a little easier. If you make it to the second target, that's a $200 target on your second contract, guys. That's a $300 trade. One $300 trade a day is a $1,500 week. A $1,500 week translates to a $6,000 month. And a $6,000 month is a $72,000 year. That's $150 per contract. That's pretty minimal. That is not a lot when the market is moving the way the market moves. So guys, this is your mechanical plan as a brand new user. It's on the spreadsheet. It's also right there on that KISS plan that I dropped in the room. Guys, this is your best of the best. And then when your chart reading gets it to where you don't want to follow the KISS plan, I've also got the exact same thing with a template for you to build your own plan. But my goal for each and every one of you is that you have a plan. And if you don't have a written plan, you don't have a plan. So create your plan. Take a lot of pictures, guys. Commit to a lot of pictures because 15 pictures a day is what, 300 pictures a month, 900 over the course of 90 days. D-Rock, is that the picture you're going to show me? Somebody's going to show me this picture, right? All the triggers cleared, the small are returning. There's that little pullback right to the mid-band, right inside of favorable large triggers. And let's see, from 65 it went to 42. That's a $300 trade. That's a $300 trade. Pretty cool, guys. So that's our first hour. That's crude moving right there. The second half of class is nothing more than you guys' pictures. It's you guys showing me what you're doing. It's you guys annotating charts, not just putting, David, I'm going to get on you because I want you to be successful. David, do you suppose if you had identified termination conditions, you still would have taken this trade? Do you notice how there's zero annotation? Just entry. That's it. Guys, I know it bugs you. I know you want the best feedback, but you've got to give me the opportunity. That's okay. So David, do you have your checklist in front of you? I'm going to help you. Yes? So every time you take a trade and you write, instead of just writing entry, I want you to draw an arrow to where the market started from. So we're going to go through this together. I hope you don't mind. I firmly believe in the annotation process. I really, really do. So watch this. If we just take a picture of your picture, and I'm going to change up to how I would annotate. Oh, absolutely. And David, I'm telling you right now, if I don't get frustrated. Um, but let's go through it, right? So we're in a downtrend. We know this without a doubt. We're not coming from a termination condition. So it's a loss of momentum, not at an area, not a termination. So I do know that I'm not coming from a termination condition. So now let's just go through, right? We've identified that. That's the first thing that I'm looking for. So David, I'm looking for odds favorable momentum on the 13-2. And I want you to see how easy this becomes. So I'm just going to do this, and it doesn't even matter where you do it. Watch this. I'm going to put OFM, odds favorable momentum. And I'm going to take an arrow, and I'm going to draw it right there to the gap between the small and the large. Everybody give me a Y, right? So what have I done? I've taken the advantage, and I've embraced it visually. Now I know exactly what I'm looking for. This is how it becomes easy in the moment, guys. And then, David, what's our rule number 2? No termination conditions on the 13-2. So I'm going to write that before I do anything. No termination. I'm going to try and spell it. And then I'm going to look, David, and I'm going to see where that price went to. So there's the bottom of the bar that starts the retracement. The bottom of this bar is literally the start of that pullback. Does that make sense, everybody? And then let's look. What's the recipe for a termination? Price reaches an area, no triggers through, no trade. So what we're doing is we're taking those words, right? No worries. Whoops. So David, let's take your picture and let's look at it. The first thing that happens is the price bar. So let's get rid of everything and let's turn it into a termination condition lesson. Price started here at 44.10 and price reached 4,435, that blue Fibonacci fib. Are you good with watching that part of it? Okay. And I'm telling you, man, everybody, David, I struggled with termination conditions. I'm super sympathetic. So David, when price reached this Fibonacci area, right? The bars came down and price got to 44.30, and you can see it visually on your chart. No, it, you entered on the pullback, right? No, Charles, we all do. So where did the pullback start? 4,425? David, couldn't we say price reached the fib? Does that make sense? This is putting in the bar structure. Yeah, so you had already reached the area. Does that make sense, David? I think I see what's happening. So what you're saying is price reached the area and then it's done. I'm going to sell the pullback. I've seen this before, and this is an awesome lesson for everybody. And let's see if we can find a real world example in the moment. Here we go. Check it out, David. Price reached Fibonacci support and absolutely none of the trigger lines broke through, right? There's your area of resistance right there. And this is kind of what you did, right? There's that pullback. You know where it's likely to continue. But do you see how there's no triggers through the area? This area is a textbook termination condition. So even though it pulls back to an area inside of favorable large triggers, I have to sit on my hands and I have to give myself an opportunity. Because up here, price reached the divergence high, so I didn't take the long trade. And down here, hey, big game Biff, down here it looks very similar, right? Price reaches Fibonacci support, and none of the triggers break through. They're all way above, and that's kind of my go-to. That tells me don't take that trade at 44.01. I'm looking to see what it looked like over here. And it does break eventually, right? But I don't know for sure if it's going to break, David. And that's the key. And that's where statistical advantages come in. At 4,400, I just didn't know whether or not that was going to break or whether it was going to bounce. And what time was that? That was at 6:14. Was that the S&P? Good morning, Sydney. I didn't look to see which market that was. That was the S&P. It's 6:14. Was this today? 4,400. So that was it right there, wasn't it? Look how that termination condition reacted. So David, this becomes your safeguard. I think that's the exact trade. See how that termination creates the response? So anytime price reaches an area, and David, I think this is an outstanding lesson. You asked before if you should trade near the fibs. I'll trade near the fibs all day. But I'll do it with odds favorable and a clear path. An entry in an area of resistance inside of favorable large triggers may still be near a fib. But the difference is I won't trade into a fib that I'm not sure if it's going to hold or break. You don't have them on your charts? What indicators are you missing? Oh, well, you're new, David. That's okay. We're going to piece it all together. So this is crude oil. Price reached Fibonacci support. Where are the triggers? Above? This is the most current bar, David. See how it made it to that fib? And all of the triggers are above? This is a termination condition in the moment. This is nothing more than a, hey, let's pump the brakes. Let's sit still for a minute. Let's see if it breaks. Let's see if the market dances around it. Or let's see if it reverses. And the reality is, until these trigger lines get to the other side of this blue line, I don't have any short opportunities as a high probability trend trader. Does that make sense, David? It may push through. And then here's the other side of, well, there's a bunch of big blue lines there. Is when the area breaks, let me see if it happened here. Once the areas break, oh, so don't let the trend rule to your decisions. Let it keep you focused on the right direction. I like that you're embracing the trend. I really, really do. Let the trend tell you which direction you need to look for momentum, right? And then once you have momentum, let that large chart tell you whether or not you've already reached the area. And if you have not, then we'll go look for that entry. I think your picture is awesome, and I think that your read was 2/3 of the way there. You had awesome momentum, right? You were trading with the trend, and you even skipped ahead to rule number 3 and took an awesome looking pullback to resistance inside of favorable large triggers. So David, the only thing that we have to refine a little bit is that little awareness on termination conditions. Other than that, this is picture perfect. Great job. And guys, what's going to happen a lot is you're going to have these little aha moments where you're like, oh, that makes sense. And there's no telling when they're going to click, but they do. So David, embrace the idea every time. And I like talking myself through it. So when I go to a chart and I'm making a read, right? I open it up and I'm thinking to myself, all right, my trend is up. I'm only looking for rules to be met for long trades. And my first advantage has to be odds favorable momentum. So small triggers are above the large triggers. The large triggers are wide and they're angled in the direction of the trend. The momentum is up. So now I have to be aware of whether or not I'm trading into a termination condition. And David, since my small triggers are through the area, but my large triggers are not, 15.327.56 is not broken. I don't have a clear path yet, which means that this has the potential to break because of the momentum, but rule number 2 hasn't been met. The area is not broken. Does that make sense? And we're doing it right in the moment. And if for some reason the area was broken, I might look for an area inside of favorable large triggers, but since it isn't, and the path isn't clear, and I've also got 2 divergences, for me, this isn't a high probability trend trade, and this isn't even the best look on a medium probability trend trade. And then I'm forced to do absolutely nothing because my rules say sit on your hands and wait. Either let it roll or let it break. And I'm telling you that there's opportunities all day long, guys. So what you don't catch in the moment, you'll catch something a little later. And some days you might wait 2 or 3 hours for a trade. 90%, 90% is reading indicators, waiting for the advantages. 10% is jumping on it like a cat on a mouse. So, guys, that's my first hour. And I honest to goodness, I say the same thing the first hour every day. Um, absolutely. So for the path to be clear, let me give you the picture and let's talk about it one more time. Da, da, da. David, have a good one. Watch the video. Let's keep doing this every day. Anthony, the white number is nothing more than a byproduct of determining divergence. Your software does calculations in the background to decide whether or not the momentum is gone. And there's no way. Oh, wrong one. Sorry, I'm looking at the wrong one. Let me do this and then I got you, Anthony. Charles O, sorry, man, I'm like, I see shiny things and I go sideways. Charles O and everybody wondering about termination conditions. It really can be this simple. If price reaches and no triggers break through, the path isn't clear. Rule number 2 is not met. The only way at this point for this to be a clear path up is both the small and the large get to the other side. That's it. Because guys, remember, fibs are where decisions happen. And then that third potential option, Charles, and this moves you into medium probability trades, is the small triggers smash through with odds favorable momentum and the large triggers don't. This is a 50-50 look. This means that this area has the potential to break, but it's not broken yet, not until both small and large get to the other side. So notice how price creates the idea that this is where the decisions are made, but triggers identify when we've broken through. And look how it doesn't break. 3 divergences in the same location. Guys, look at that reaction. There's S&P cranking down. And then crude oil, you said, had a 50-50? Somewhere back here. 924, which is 1024. 924 my time or your time? Right there. Smalls have smashed through, large have not. This area has the potential to break with all that momentum. There's a little pullback right to resistance inside of favorable large triggers. That's not the one. But we circled it earlier, right? And there it was. And that's the one that cranked down. Guys, remember that you've got to go through the process of learning to read these. And it's not something that happens in a day. First, identify. Take a picture, guys. Take a picture and show it to me. Don't make me chase it. First, you identify the trend. This is the easy part, up or down. Once you identify the trend, and guys, this is the same stream of consciousness to get you to look for a trade. You determine whether or not you have strong triggers. And then once you have strong triggers, you determine whether or not your path is clear. This might take you a day. This might take you a month. It's okay. It's new stuff. Allow yourself to be new. Once you have odds favorable and a clear path, then you start working on your entries. The challenge is everybody walks into this room and says, I want to make money. The money is a byproduct of the process. Without the process, no money gets made. Unless it's luck, and luck isn't always repeatable. So guys, this is your path. Charles, take care. I'll see you in the morning. Tomorrow I teach from Dallas, Texas, not Amarillo. Getting closer to home. Embrace it. Write down questions that you have. Take a lot of pictures. And guys, I'm going to take my first break. I'm going to go stretch my legs real quick. Wow, there were no areas inside of favorable large triggers. I'll be damned. I wonder if that stumped anybody. All right, guys, I'll be back in 5 minutes. If you have pictures, post them. If you have questions, post them. When I get back, I'm going to look at everything that's been posted. And then, guys, I'm going to take everything that you posted and I'm going to relay it back to whether or not you had advantages, no matter what kind of trade it was. Um, Into resistance, no triggers through, don't go long if your rules say don't go long. I'll be back in 5, guys. There's those crude oil inventories. Whew. Pushed it down, didn't it? All right, so I'm going to go through and I am going to start looking at your pictures, guys. I'm going to take a look at what you've done. We're going to relay them back to advantages. We're going to talk about what you saw, what I see. We're going to talk about your reads. We're going to talk about my reads. We're going to celebrate victories and we're going to look for opportunities to do stuff better. So, Gene got us going today. Term at a Fibonacci, absolutely. Triggers roll, I love it. Looks like you were taking a momentum style trade out at Fibonacci. And then maybe that was your second target right there. I like it. Gene, great use of terminations, letting the triggers roll, getting the small almost on the right side, large roll, just confirming and taking advantage, taking a shot. Not a high probability trend trade, but a nice chart read. Good job. And then Ivan. That happens sometimes. The best, Gene, is where you take the perfect trade and it runs for $1 million, and you realize that you were on simulator. I've done that one before. And then Ivan, is this just you testing stuff? Seeing what we have, where we have it, getting used to using the tools. I like that. That's all right. You've got it. You've got everything that you need here. True story. You've got the large chart, you've got the small chart, you're showing me everything on both. You've got circles where you think things are happening, and then we'll just turn this little rattle on the keyboard into some actual words. But man, that's perfect, Ivan. Keep this process going. You're going to give me everything I need to work with you every day. All right, Jose. 50-50, super tight, perfect pullback, money, and then when the divergence prints, you take it off. I like it. Great management, Jose. Perfect entry, quick profits, not willing to give it back. Solid. Great trading. And then Gene again. Termination. Oh, Gene, let's figure out where you went long. Okay, here we go. Never got that momentum. Do you see it, Gene? Just never really got it. Large triggers stayed down. Smalls were on the wrong side of them. Just a tough look. Directly into a mid-band, and the market had been trending down off of great terminations. Just a transition period there. That happens, Gene. And then Jose, same thing. All the triggers are above support, and you choose to go short. Not a clear trend down at all. Jose, if your large triggers are still up, it's not clearly a downtrend. If all of your triggers are above support, it's not a clear path. I love that it worked out for you. It is a termination condition. But if you were watching the NASDAQ this morning, you had the same look that continued up. So that's a pivot stop out, no triggers through, large triggers roll. I see exactly what you did, and I like that you protected yourself at the trouble spot. So because of the termination condition, willing to leave some risk on that trade. The only challenge are all those giant fibs, but you made a calculated decision. And then D-Rock, everything says down. Only one divergence on a 50-50. You enter at the area. You're able to take profits. Second divergence on a 50-50. Would have been a good reason to get out. You hold it one more in that third divergence, you're like, "Pff, gone. $100, man. It adds up, doesn't it? $100 adds up. It doesn't take a whole lot of $100 trades to watch that P&L grow. Jose, weak triggers, but a clear path. You enter at the area. So it's weak triggers and weak triggers. I see why you did what you did. You took a shot at the clear path without the advantage of momentum, and those losses of momentum just pushed it up further. And I think that was also right before crude inventories. You had some guys jockeying for position there. And then when it hits resistance and turns into a momentum trade, you take the push down. Jose, that's nice trading. Way to keep your head in the game. And then Anthony, oh my gosh, you let me not answer your question, Anthony. That's what we call a reversal bar marker. I'm so sorry. Are you with me? I get distracted sometimes. So this is what we call a reversal bar marker. And let me show it to you. All this is this is the price at which this bar becomes an up bar. That's all it is. And then I'm also going to show you how to use it. We use that reversal bar marker, Anthony and everybody really. We use it on the large chart. There's this phenomenon called the gap theory. And the gap theory states that when price accelerates away from those large triggers and bounces into something, it's likely to close the gap. It's likely to snap back. Yeah, Snorri, without a doubt, to snap back and close that gap. So, Anthony, we can use that reversal bar marker to identify when a mid-band is behaving as a termination condition. Price accelerates all the way down into the mid-band. Your reversal bar marker is right at the top of this box, which means that this has room to create a full reversal bar before it hits those triggers. Price is likely to snap back and hit those triggers. Same thing, price gets all the way up here. See how the large triggers are below the reversal bar marker? Price is likely to close the gap back. And the same thing here as well. When those large triggers are hanging out on the wrong side, the other side of the reversal bar marker, price is very likely to snap back and close that gap. And then you see it here as well. If you were thinking about taking the short, look how it closes the gap. And Anthony, this is one of those patterns that you see all day long. Jose knew it, and that's why he went short. See how price hit all the areas? Large triggers were a full bar away. Closes the gap. There was more to that than just that look. But it happened again up here. Straight to the mid-band, straight to resistance. Large triggers a full bar away. Sure enough, closes the gap. Once again. So this is one of those patterns, Anthony, that you can start to recognize. It's funny, Snorri, that you put that, because Snorri's first week in class, he became a gap theory specialist. And Snorri, you probably posted 25 pictures of gap theories, right? But now you don't trade into them. Look at this, guys. Weak triggers with a clear path. 1, 2, 3, 4 divergences in the same price range. And look at it push up. Rules keep you safe. What's going on in the wonderful world? See that reversal bar marker up there? And those large triggers above it, Anthony? This is that gap theory. Oh, absolutely. It's never guaranteed to close the gap, but because we're at this mid-band, right, we're at a fib that hasn't broken and those large triggers are all the way up here, let's see if NASDAQ wants to put on a lesson on the gap theory. We'll see if we get a pullback somewhere up here. So if you were thinking of going short after a great termination condition, haven't gotten there yet, Dwight, but I got you, brother. Thank you. And guys, do what Dwight did. If you ever suspect that I may have missed a chart, go, hey, Mark, don't forget I got one. Because I do miss charts every now and then. It's never intentional. So I'm going to keep scrolling, and we will see if It closes the gap. All right. Since the fib did not print to the right for the current price bar, should that be considered a termination? Yes. Great question, Dwight. Absolutely, without a doubt. And let me show you why. Such a good question. So when fibs are printing on your large chart, they come from three different time frames. So you have fibs that are coming from a 5-1 chart. You have fibs that are coming from a 21-3 chart, which is an even higher time frame than your large chart. And you have fibs that are native to your large chart. So when you look at it, your skinny fibs, they'll stop printing in line with the most current bar. They won't carry all the way to the right. That's one of the ways that we can identify it as coming from the 5-1. Same thing with the 21. The only fibs on your large chart that will continue printing into infinity are the ones that are native to the chart. Fibs come from three different time frames on your large chart. 5-1, 21, and 13. Those are the three time frames that all present themselves on your large chart. If it extends all the way to the right, like off into the distance for the rest of the day, that is your 13-2 native chart. That's your large chart native chart. If it's a skinny little fib and it stops printing like you pointed out, it's from your 5-1. And if it's a big fat fib and it stops printing, it's from your 21. So these won't run all the way out, but they will stay right there with the most current bar. So absolutely, without question or hesitation, when you see those ones that aren't extending, they are in fact termination conditions. So on your picture, price reached Fibonacci support without a doubt. But notice how it's the fib on the 5-1, right? So we respect those using the trigger lines on the larger chart. Did that answer it? That's a great question. Awesome. Up here you can see that other 5-1 fib, right? And here it stopped printing at the fib update at 10 a.m. We didn't use that one anymore. And now it's not going. Awesome question. I'm not the most technical guy, but I do have the answer sometimes. All right, Freddie, let's see what we have. Have momentum trend, but was trying to get a limit sell. I'm not understanding how to set it. No worry. So you were looking for the pullback, Freddie, and it just threw you right in the market. Is that right? Cool. I know this one because this is exactly what my wife did. So check it out. Everything says down. It's 50-50. Let's say hypothetically, Freddie, that I want to get in at this resistance up here. Right click on your chart and it's going to give you sell limit, buy stop limit, sell limit 1. That's what puts the order up here. What a lot of people do is they're like, okay, I know I want to sell on the pullback, and they go like this. There's my reversal bar. Well, that happened really fast. And they hit sell instead of waiting with a limit order. So if I'm looking for the higher time frame, I put a limit order up here, and then if price reaches it, then it gets me in. You tried that too? You tried right clicking? And it just... So do me a favor, Freddie. Activate a limit order. But let's say if you're watching... That's NASDAQ. I don't want to watch NASDAQ. Let's say you're watching S&P. Just come to your small chart and right click way off in the distance. And show me a limit order. And then just X out. But take a picture of it. Yep. And then if you're looking for a long trade, simply by clicking below the current price, it's going to give you that limit. So you're looking for the limit orders. And not trading into termination conditions, obviously. But let's make sure that you can do them. And then once I can put a limit order in, I can click on it and I can put it anywhere I need it to be. So I can activate my limit order all the way up here. And then I can click on it and I can put it where it belongs if I'm going to do it. So yeah, make sure that you can get that limit order, and then it just becomes a matter of putting it in the right spot. And not even a possible termination condition. That is a textbook termination condition. Let's hit the other part of it. That is blurry. Let me try from the screencast link. There we go. Price reached Fibonacci support and absolutely none of the trigger lines break through. So that's absolute textbook termination. And then I believe this trade, the small, did break through, and it did give you a pullback almost right to where your entry was. Great picture. And then let me know if you need help any further with those. And then Jose, everything said go and it didn't. And that was right at crude oil inventories. Jose, that was at 10:30. So that market was about to go absolutely apeshit. And you're able to take advantage of it once again. Let the triggers roll, little stab back. You've gotten really good at that trade, Jose. And then Alan, pivot from nowhere. Everything says up. You and Jose are in cahoots. Nice job. Nothing wrong. Not giving it back into a pivot stop out right at crude oil inventories. Nice job, Alan. Oh, awesome, D-Rock. No inventories today? Oh, because of the holiday? It just dropped, huh? I didn't know that. I just always assume. Yeah, because when there's a holiday on Monday, they do it. Perfect. Freddie, this is perfect. I mean, not into a termination condition, but that's exactly what you're looking to do. So you're actually waiting for the market to come back to you. Isn't that awesome? And of course, this was just a test, right? Because you're directly into resistance with absolutely no trigger lines. Wink, wink. Nudge, nudge. Awesome. So hopefully, Freddie, this is going to help you with those entries a lot. Yeah, no worries, man. You're great. And then Snorri, small cleared, not large. No trigger cleared here. Felt uneasy about this trade and moved your stop. Was it the one-to-ones and the divergence low with no triggers through it that made you feel uneasy here, Snorri? And you thought to yourself, oh man, that's a termination condition, right? I love your entry. Pulls back up. Not in an area, really. You kind of had it in line with those one-to-ones. Beautiful, which means it's low risk. And then that fluctuation gets you as you come back into it. You're like, oh no, they're going to push up. I'm not going to give it back. That's okay. You made a calculated decision based on your chart reading. You entered the market, and then you knew that you were a little outside of your rules. It made you feel uneasy, and you took it off. I would say that is a very normal, natural part of the day trading progression. Nicely done. And Snorri, I shot an 86 yesterday. I embraced the process. Even had a birdie on a par 5. True story. Had a birdie on a par 5, and I thought, man, I can't wait to tell Snorri in class tomorrow. Thank you. I'm going to get there. I'm going to hit the 70s eventually. I finally figured out how to swing my clubs, and it's changed everything. So the process yields the results. Shit. John shot an 83 the other day. You leave for Mesquite tomorrow for your annual boys golf trip? Oh, nice, man. Have fun. 90 is a great score. Guys, look at that termination condition and what it did. Do you see it? I told my wife yesterday when I left, I said, John shot an 83 the other day. I better get my poop in a group and get into the mid 80s. I can't let him gain that much on me. Termination. Full reversal. Odds favorable. All I need is a clear path, right? Give me a clear path. Same thing. Sometimes we just have to wait. Waiting for the best of the best. Waiting for that opportunity to have odds favorable. Waiting for that opportunity to have a clear path. Guys, we've made it through all of your pictures. Did you really, DL? I was watching a video on Glen Eagles in Scotland today. That's bucket list. John Novak doesn't know it, but we will go to Scotland and play St. Andrews at least once. Man, take pictures. I would love to see that. Golf is very much like day trading. The less effort you put into it, just do it right. You've played it 4 times. Competitively, Snorri? That's amazing. I love watching the St. Andrews rounds. 2 times. So cool. Oh, Dwight, making Ron proud of you, right? Termination, all that momentum, and you take a quick little pow. Nice job. Doesn't have to be a home run, does it? Doesn't have to be a home run. Yeah, I'll be flying out to Florida to play with you for a couple rounds. I have to get back in the gym so my back can handle it. You've really done a great job with this trade, Dwight. I mean, you've really done a great job. You're waiting for terminations, you're getting the best momentum, and you're like, all I need is a little bit. All I need is a little bit, and I'll never want again. You guys make me proud when you rock it out. What do you guys think about that? Ugly anything can happen triggers right at fibs. Nobody went long up here, did they? Nobody said, I sure hope it goes. Right into that fib. We'll see where it pulls back to if it does. There's a 50-50 trade, right? Oh, ho, ho. On crude oil. Not the best bottom, but multiple divergences suggest that it might have been a little overrun, which means that I've got tons of momentum, but I do have divergence. So you guys that were looking for this one, where's the market likely to continue? That's your window of opportunity, isn't it? So I'm sure that everybody said, you know what, if it goes down here, I probably don't want to be in it. Because small losses are a normal part of a positive equity curve. And you're just waiting for a reversal bar to see if you get it. But remember, we don't have a clear path, right? I've got a couple areas that I'm hoping break, but they haven't broken yet. I do have strong triggers. I do have areas where it's likely to continue. I've got that little loss of momentum. We'll see if there's a fight. What's your entry price, Freddie? Was it up here or was it support? Did that limit order work for you? That's my real question. Actually, you know what? Manage your trade. Okay, good. Good, good, good. Progress every day, right? What do you guys want to talk about? I'm going to go take 5 minutes, but when I come back, last hour belongs to you. D-Rock, you know what one of my favorite courses in Austin is? Is Riverside. I love Riverside. I love the way it's laid out. Um, I used to play Lions a lot when I was in my 20s. John and I played Terra Vista. Um, For my 50th birthday, he flew out. We played Terra Vista. That was a really nice course. And then I lived right next to what's that one in Cedar Park? Avery Ranch. Never played it though. When I was playing in Austin, it was just a lot of spray and pray. I finally have a little method to my madness. I can finally aim, and I can say, all right, the miss is to the left or the miss is to the right, and I finally know what my distances are. So I'm a completely different golfer than I was last time I lived in Austin. That's my thing, guys. That's my midlife crisis. Uh-oh. Young guy playing competitively. That's awesome. Good picture. We will play one day. Guys, that invitation's open all the time. If we're in the same city, 50-50 with Divergence, probably gotcha. If we're in the same city and you ever want to swing clubs, let me know. I have played with Nexgen users before. It's a lot of fun for me. Um, Freddie, whoops. I'm going to show you something. You may or may not choose to use it. I liked your read on momentum, right? I loved your read on the potential to break. Guys, if you're using the KISS plan, one of the biggest things that kills 50-50 trades is divergence on that smaller, faster chart. Some people choose to ignore it, some people don't. From a good top or bottom is another big thing. As you have that stepping stone plan, guys, this is the best way to take that trade. This offers the highest chance of success on those 50-50 trades. And you'll notice that in bold and underlined it says divergence, no trade. I'm a firm believer that divergence ruins the party, especially when it's not a solid termination condition, reversing that market. You'll get there. Freddie, right now there's so much stuff to think about. Paul loves the look, right? Divergence says bottom of the window. You still got run over. Yep. So this is one of those ones where experience says, I'm going to take a shot at it. It's worth it. You love the look until they stop working. But a bad bottom into a mid band, two areas not broken, and divergence. It sucks to sit there and weigh out all the things against you and not take a trade because it means that you don't get to get excited. You don't get to get into the market. But there's a lot of indications. Is anybody trading the KISS plan that didn't take that trade? Just curious. Perfect. And I'm going to tell you guys right now that day trading isn't only about winning. Um, it's not only about how much money you can make. It's how many times you can say no thank you when your statistical advantage goes away and not give that money back, right? Because if I lose $200 on a rules making trade 5 times in a day, then that's $1,000. And if I catch 4 high probability trend trades for 300 each, that's $1,200. How frustrated are you at the end of the day to be up net 200, maybe $100 after commissions? And it's not that you couldn't find the right trades, it's that you chose to take the wrong trades. That you chose to put yourself in a position where that advantage wasn't there. And this is one of the biggest drains that I see on new users' accounts. It's not whether or not you can catch the high probability trend trade. It's whether or not you can sit on your hands and do absolutely nothing when those advantages aren't there. And that's one of the hardest things you can do. So great job for you guys that didn't. And we saw that one. Even though price is above the red fib with the small triggers, what's my feedback? It's a 50-50 trade. That's it. My feedback will always be consistent, Dwight. You have an area with the potential to break, but your large triggers haven't broken it, which means that you don't have a clear path. Yes, D-Rock. As opposed to this one, which is a good bottom, which is pretty awesome. But remember, when they're not broken, Dwight, that's where that dance happens, right? See this fib where it didn't break? That's what all this nonsense was. So pretty cool that you can identify that and just keep yourself a little safe. Guys, let me show you my strong top or bottom picture. As a brand new user, the easiest way to identify a strong top or bottom, to know that that advantage is present, is when you have a no triggers through termination condition. No triggers through reverses the market. It's a strong top. A strong top only works to the next termination condition, right? It'll give you an opportunity on a 50-50, but this strong top gets you to what ultimately becomes a strong bottom, which becomes another strong top and gives a full reversal. So when I'm talking strong top, strong bottom in the room, and this is just kind of a reminder for everybody, it's a no triggers through termination. And then what that does for you is without a strong bottom, doesn't this look familiar? These 50-50s are less likely to work. Without a strong top, this 50-50 is less likely to work. And there's that weak bottom, 50-50 doesn't work. And this is just a pivot because it didn't make it. Notice that the 50-50 doesn't work. So guys, that strong top or bottom pays huge dividends on those 50-50 trades. And now we're 50-50 on the bottom, right? Pivot stop out, smalls are through, larger not. There's your second divergence. Sure is a lot of momentum. NASDAQ's coming off a termination condition. And then guys, there's that strong bottom, 50-50, pull back to support inside of favorable large triggers. Paul says, class, let me give you some insight to my trading. Smallest window ever, not a lot of risk, 50-50 from a good bottom. So one of the times where you may grow into a position where you ignore divergence, one divergence is maybe with that strong bottom, right? And then you just have to sit through. So price hasn't reached this fib. This fib is not a termination condition, even though it was close. This fib becomes a target. I see this a lot. But there is a strong bottom, odds favorable, potential to break, tiny window of opportunity, perfect entry. If you are in at 4,400, you already made your $100. You're already break even. Now you're just waiting to get paid. So D-Rock, this may be an evolution for you. And did you hear what I said you might have been managing? When you have a strong bottom, so my KISS plan evolved. I'll tell you guys how it evolved. If I have a strong top or bottom, this one is no longer a factor for me. I'll trade it with one divergence. That's how my personal plan evolved. And here's the deal. If I don't have a strong top or bottom, then the divergence part stays in place for me. That's just how my plan has evolved. Yours may, it may not. Totally up to you. And then if this prints as a divergence, a second divergence, that'll be enough to take me out of a trade. I won't take a 50-50 against two divergences. But until it does, there's no reason to do anything. Does that make sense, everybody? Hope so. I'm going to leave this up, guys. I'm going to take 5 minutes real quick. And when I come back, we're going to finish strong. If there's something that you want to talk about, let me know. Last hour belongs to you guys. So I will be back and we will finish up. Back in a few. All right, y'all, home stretch. So, Dwight, this is a good example how it wasn't a broken area, right? And since it wasn't a broken area, that momentum style might be not the best. So when the large trigger doesn't break through the current price bar, no, it has nothing to do with the price bars. It has everything to do with the fib. Has everything to do with the fibs. Here, let me show you the correlation between the two. And this was right at 29. So check it out. I'm going to put a box around this bar trading directly into the fib. Decisions are made at Fibonacci areas. Guys, that's the easiest way for me to explain this. Decisions are made at Fibonacci areas. So what that means, Dwight, and you see it right there, your large chart says down, right? Your large chart has momentum. Your large charts reach the area. But look at how many buyers were at that first fib level to fight. Look at how many buyers tried to push that market up, took the momentum on the smaller, faster chart. This is why we trade the large chart. This is why we let the large chart lead the way. Ultimately, the momentum pushes it down to the next fib level, and that's where the buyers actually get their footing and take over. But when you see these fibs like this and the triggers aren't through, this is a very real possibility. So for your style trade, having that clear path, right? All the way through, both triggers through. Let's see if we can find an example of it. Or even for yours, Dwight, before you get to that decision-making point, it creates an advantage for you. Right there, until you get to that point, that's where your trade has the highest success rate, when you clear everything above and you haven't reached everything below. Because areas aren't required to break. And we've got these little indications of when they have a better shot. Does that make sense? Does that help? So here we are into one-to-ones, right? None of the triggers are broken yet. Large triggers are still flat. It may continue down, or this may have just been a bunch of pissed off sellers that needed to go try and collect profits before they let the buyers take over. We don't know. We can't see it. The only thing that we know for sure is that the path isn't clear. And that's why I always try to just resort back to, guys, rules met, rules not met. Have the easiest, most simple plan that you can follow and follow it. And then, D-Rock, I think that you posted earlier that if you're patient, there it is. Being patient is the key. The high probability trend trades happen often enough to make great money. And then there you go. Just add contracts. It's easy to say it, isn't it, guys? It's easy to say sit on your hands and do nothing. It's hard to sit on your hands and do nothing. I know that it's hard. I won't lie to you about it being hard. But this is why we trust, right? This is why we have to do the repetition. This is why you have to go through. D-Rock, this is why you had to keep taking pictures and posting them to make sure that you understood the advantages, that you gave yourself something to be patient for, right? And I'm going to tell you guys right now, all of you rule followers, there was this phenomenon when I was training managers in a different career. And I called it the 30-day stupid. And I know that sounds horrible. But the 30-day stupid, when you're training restaurant managers, means that they come into new systems, they come into new rules, they come into new processes. And I'm a systems and routines guy. I created the checklist for these managers. I actually got a phone call about a month ago that a lot of my stuff is still being used in this company, which makes me feel good, even though I'm not getting paid for it. Um, but I would give you a roadmap for success, and I would say don't deviate from this. This is the order that you do it. These are the questions that you ask. This is how you do everything. and you will always have a successful shift. And people would come in and they would train, and I would get all of these prodigies because they would follow the checklist. And my vice presidents and my regional managers were like, dude, Mark, you are the best ever, and these guys are amazing, and they're not making mistakes, and holy smokes. And then about 30 days in, we forget what brought us success. About 30 days in, we decide that we no longer need the roadmap. About 30 days in, you decide that you're so damn smart that you're not going to bother with the checklist anymore. You're not going to bother following the path that brought you success. And that's where mistakes happen. And guys, for traders, it's very real. You'll do wonderful. Sometimes you'll do wonderful for a couple weeks, and then you'll just have this moment where you're like, I'm so good at following a plan. I'm going to break it just a little bit because I'm kind of invincible. I don't know if you've met me. And that's where the problems happen. And that's where accounts get blown out. And that's where you forget everything that brought you success. That was you in August. That was me 2 weeks ago, Paul. Not going to lie. When you sent me a message and we talked a week ago, it was the most timely thing ever to remind me that I'm human, that I will make mistakes, right? So when you make mistakes, don't beat yourself up. Say, all right, I'm human. I jacked it up. Let's unjack it and get on with our lives, right? And eventually you start noticing. You'll start noticing when you deviate from your plan. And the problem is, the most damaging thing is when you deviate from your plan and you win. Because it teaches you that it's okay to break the rules that give you an advantage. And I think I still have it in here. This is one of my favorites, and this talks about the path to becoming a day trader. And it says that the exercise isn't going to be easy, so you got to be easy on yourself. The more accepting you are of your mistakes, the easier it will be for you to make the next attempt. If you make a mistake, don't beat yourself up. Encourage yourself to try again. And guys, I'm going to compound on this one because I tend to lean towards warm, fuzzy, and supportive. Is as you learn, there will be mistakes and learn to accept them. But more importantly, as you learn, there will be victories. There will be Freddie getting that limit order at the right spot. Anthony using that reversal bar marker to make sure you're not trading into an area. Ivan, it may just be getting the right words on the chart, right? There's going to be victories every day. Don't miss a celebration. Don't ever miss a celebration. If you don't trade into a termination condition, high five yourself, right? Show me the picture. Let me high five you. One of the most damaging things that I see is people spend all of their energy beating themselves down, and they don't spend equal energy lifting themselves up, guys, and it shows. It'll show in your results. So from this book that I'm reading, I'll give you the book. It says, I think that this is one of the biggest problems with traders. They beat themselves up so much for their mistakes, it's a wonder most don't have bumps and bruises each day after the trading day. You must take it easy on yourself. Most people are harsher on themselves than they would be on their worst enemy. Is that true for anyone else other than me? This all leads to poor trading results. It's so true. If you haven't read this book yet, guys, it's only like 120 pages. Read it. I'm telling you, it changed the way I think about my trading. It changed the way I approached my profit taking, and it changed the way I approached my stops, and more importantly, it changed the way that I behaved. Having my best interest in mind. Man, you're so right, Freddie. If we talked to others, we would have no friends. And you should be the most important in your life. So that's like a little psychological thing, guys. That's me. I'm a big hippie. There's a 50-50 with no divergence. There's the lowest point inside of favorable large triggers. How quick was that? Not coming from a good top. Not coming from a good top. Two areas not broken. This is not a high probability trade. But there's a lot of advantages in place. the advantage of momentum, the advantage of areas with the potential to break, the advantage of a tiny window of opportunity, clearly inside of favorable large triggers, the advantage of strong triggers, the advantage of no divergence. Do all these advantages guarantee a winner? Hell no. But if it does win, look how far away that blue fib is. So let's see. Are they going to get us? Or are they just going to mess with us, go without us? I don't know. Guys, I'm not saying take a trade. I'm saying that if you do take this medium probability trade, your first target's at 100, your second target's at 200, your stop is up here where the market shouldn't go. You have 2.5 points of risk on a medium probability trade. And if you love the idea that it may go to the next area, maybe your second target goes lower. But I don't have the advantage of a clear path. Does that make sense? The one thing that I have to go back to is that I don't have the advantage of a clear path. It isn't high probability. I can't realistically feel as though I'm going to win this trade 70 to 80% of the time, especially not coming from a good top. So you have to decide if it's worth your money. It may be, it may not be. I don't know what it's going to do. Termination conditions, small trigger lines did not break through. Small triggers broke through. Large triggers broke through. And you're absolutely right. 3 divergences. You're going to miss it in the moment sometimes, Ollie. And then when everything rolled, you took the pullback to large trigger support, everything. Oh, so that was your exit. And your exit on the short, Ollie, is where a lot of people go long in this situation. Yeah, you held through a lot for sure. That's a lot of risk. This will bite you in the butt later in life. It's easy on sim. It's easy to hold like that on sim. You got brass clackers. Use that pivot. Take those quick profits. Get the hell out when that divergence prints, right? You got to manage them. Entries are only part of it. Management's the other part. Look how they're stuck. They're making decisions, guys. Buyers and sellers are making decisions. Buyers and sellers are trying to figure out who's going to win. That's all it is at Fibs. They're trying to make a decision. The sellers are saying we have momentum on our side. Can we keep pushing it? Buyers are saying, dude, we already told you once we wanted the market to go up from here. And now here you are again? Would that be a decent top? Nope, that was a 50-50, so it's a bad top. No triggers through. Can you do an example of a clear path versus momentum? They're two separate concepts, Sydney. A clear path means that both small and large triggers have made it through an area. Momentum means that there's separation between your small triggers and your large triggers. Two completely different concepts. So momentum, momentum has nothing to do with anything other triggers. And then the clear path has everything to do with trigger line location versus the area. Oh, look at that. We made money. Let's go break even. What do you say? D-Rock, there's another one of your $100. Does that make sense, Sydney? From 92.50, I only have to make it to 88.50 for that $300 trade. Should we see if it makes it? I don't know. I already got paid and I have no risk. Paul already got paid and he has no risk. Oh no, Paul still has all his risk. That's okay. I went break even after my $100 because I'm very pragmatic. I try not to have opinions. I certainly try not to force my opinions on the market. And honestly, I got nothing to lose. And I've already been paid. So it either gets me or it doesn't. Guys, this is the time I'll go make a sandwich. I don't care. I'm in it. My target's in place, my stop's in place. There's nothing for me to do. Does that make sense? Who's watching those ticks on the 5-1? Who's watching it bounce up and down, and every tick you start worrying. Every tick you're like, it's going up. No, it's going down. Guys, focusing on ticks will wreck you. It'll absolutely wreck you. You'll hold to the next fib second contract. I like it. Paul says that's a termination condition. It's either going to hold or break. I don't have any idea, so I'll wait. Love it. I love these pictures, guys. Reinforcing your rules through photos every time. Reinforcing your rules, taking pictures of things. Look at that. We're still in. We're still break even. D-Rock says he holds for the fib. D-Rock says with that much momentum, if the area breaks, they're going to the next fib level. D-Rock believes in the large chart. And you'll put stops behind pivots all the way down. That's hard to do. But you have to remember to put it where the market won't go, right? So if you were in a short position and you were going to hold, your stop had to be all the way up here, right? And then you get a pivot, and then you can go behind the pivot. Or if you're following the super simple, you're break even. At this point, I don't care what happens. I get paid no matter what. And if I hit a $100 trade 5 times a day, I don't care. That's still 10 grand a month. Miss Debbie likes it. Nice entry. Oh, they got my break even. I just heard it in my ears. That's it. I'm out. Divergence printed on a 50-50. That's it. How easy was that? Gary, it never made $200 in profit. Multiple contracts? And you can do that too. What if I was in a 10 lot there and I just took 9 off at $100? Same trade, right? Nice job, Gary. And now at this point, I need the area to break, or I need it to roll, because I've already exhausted my 50-50. Nothing to do here. Weak triggers, add a fib, multiple divergences, and you guys said, no, sir. Those aren't my advantages. Isn't it pretty cool, though, when you get a chance to just not be in the moment? Guys, this is why pictures are so effective. When you're not in the moment, when you're not in the heat of battle, and you go back and you look at this picture. So let me take the picture. If I come back and I look at this picture tomorrow, what am I going to have written on there? I'm going to have odds favorable momentum written on there. I'm going to have 50-50 written on there, right? What else am I going to have? I'm going to have no divergence, strong triggers, small window, all the reasons that got me in so that it becomes repeatable. I'm also going to have written on this chart, took profits at 100 and went break even because I'm working on a management plan When divergence printed on a 50-50, my rules say get out. Isn't that easy when you're not in a trade? Isn't it easy to go back after the fact and identify everything that's happening, to identify what was going on? And guys, if you look at this picture tomorrow morning, you're creating a roadmap for the day, right? You're showing good decisions. So what happens if I didn't exit on divergence? It still might go down, but my rules aren't met anymore, right? Because I have divergence on a trade, on a 50-50. But you come through and you look at it, and what you're doing is, one, I'm embracing the idea that I can follow my rules. Get off of there. I'm identifying the advantages as they relate to the picture. I'm telling why I got in, and I'm telling why I got out. Guys, this is very complete. This is everything that you could possibly need. So if the small trigger's above below fib and the large triggers, that's a 50-50, would it still? Absolutely. Absolutely, D-Rock. I'm telling you, let's keep it so stinking simple. How do you like this for defining a top or bottom, a strong top or bottom? Price reaches, no triggers through. It's a termination. Embrace this recipe for good tops or bottoms. The termination creates a full reversal. This is your best of the best. So what does it mean? Let's talk about that, D-Rock. Let me take a picture of my picture so I can vandalize it. What does it mean? It means that price reached Fibonacci resistance and none of the triggers broke, right? And what it really means is that the decision of the opposing force was so strong that the triggers never break through. That means that they were so hell-bent on changing the direction of the market that the trigger lines never broke through. It adds strength going the other direction. When I don't even have a medium top. So it is. D-Soap, that was a good top, and it was a good bottom. And the thing is it's only a good top or bottom until it's not anymore. So let me find that picture. Where'd that picture go? That's a good bottom when the triggers reverse. But it's only a good bottom until the term, and then who cares? It's done. Now we're into a term. This is only a good top until I reach Fibonacci support and absolutely none of my triggers break. So while it does add strength to that 50-50 look, right? Like if I'm looking for a 50-50, a good top certainly adds strength to it. A weak top doesn't. And then D-Rock, medium tops, I know what you're saying. And let me see if I can find an example maybe that helps. And I'm going to use the small chart to help define it. Boom, 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 boom. That was 10:05. See if I can find a spot where it reversed. So what I'm looking for is a little bit of overrun, D-Rock. So let's see, 8:30. Maybe 3 divergences on the overrun, and I'm not finding a good example of it in the moment. But maybe 3 divergences, a little bit of overrun. Did we get one down here anywhere? Man, they're making it difficult. 1054, 1038. I'm trying. There we go. So D-Rock, little bit of overrun, right? But the large triggers get back above, the small triggers get back above. One, two, three, four, five divergences in the same price range. I'm still never going to call this a strong top or bottom. But I'm going to say this has a little giddy up because both charts are telling me. This chart says this chart probably overran it a little bit. Does that make sense? Yeah, cool. So I like the idea, using those small chart terminations a little bit to help you identify if it is a little bit of overrun. You will certainly be able to see that. And then that was same thing here. Multiple divergences. You don't know if it's overrun or not, so you have to let everything start to agree again. And then a couple divergences here on the weak triggers pushes it all the way up, and then the gap theory takes it back down. And then Dwight, you remember when we talked about decisions happen at fibs? This is all happening inside of that one bar. All of this is inside of that one bar. D-Soap, it happens every now and then. I don't really have problems with it anymore. There is a Ninja 8 best practices to kind of put you in the best position for not having any challenges on it. They still happen, and it's some days are worse than others, some days are better than others. That whole bit there helps a lot. Um, but one of the things that John Novak is doing is he has a team of programmers that are trying to completely dismantle and reassemble to make it stable. And he is also in the development phases of creating his own browser software, just where you can have your iPad at the beach and still get paid. But going through the best practices will help a lot. Things that I notice help a lot on NinjaTrader is not um, like letting the chart do its thing, not drawing on NinjaTrader. Using your capture software to draw helps a lot rather than actually on there. Not clicking and dragging a whole bunch. It's very intense processing. It really is. And then guys, the area still may break, right? But it's still not broken. What do you guys want to talk about? We have a few minutes left. I'm going to cut it about 10 minutes short today. We're in an Airbnb. They told us to be out at 11, but I bought us an extra 15 minutes. I got to pack up all of my stuff so I can go make money in a different city. Termination and anything can happen, right? Who cares what this chart says? This chart says don't do it. That's tough. Divergence, 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 divergence. Guys, this is just the fight. It's a huge fight. Fights are tough. No reason to get caught in them. Sometimes you will. Sometimes you won't. Absolutely. D-Rock, we land in Austin on the 14th. I've got a house in Lago Vista for a month. So without a doubt, I know you're on the other end. I'll meet you at Riverside. We'll go play. Probably going up and down. There's NASDAQ right there. Indeterminations. We'll set it up once we get there. That's crude oil. NASDAQ. Sure, Alan. Do you have specific questions about it? I mean, it's just a market. It goes up and down. That's all it is. NASDAQ goes up and the NASDAQ goes down. That's it. The rules are the same. I insist on a clear path. I insist 100%. Well, shit, you got to ask John, right? John and I don't trade the same plan, Alan. If you have questions about what he's doing, you have to go to Traders Chat and you have to ask him about what he's doing. He is 25 years ahead of me. The patterns are the same. Odds favorable, clear path. The entries are the only thing that change a little bit um, on the NASDAQ. But the patterns are the same. The patterns repeat themselves on every market. So this is the NASDAQ, right? That's still odds favorable momentum, no matter what. That's still a termination condition, no matter what. That's still odds favorable momentum and no termination condition. Like those don't change no matter. The patterns don't know what market they're looking at. I love that you put that. The patterns have absolutely no idea what market you're on. The only thing the patterns do are what the patterns do. Um, right? If I take off everything on this chart, let me go to my templates. And the only thing that I leave on there is momentum. Is this market likely to continue down based on momentum? Absolutely. The momentum's the same. Look at that. Odds favorable, and it pushes down. Odds favorable, and it pushes down. Odds favorable, and it pushes up. Stupid wonkiness, and it does stupid wonky things. So, Alan, don't get caught up on the actual market, right? Get focused. The patterns that you need. Miss Debbie, have a good one. The patterns that you should be looking for should always be, I love that you made that statement. You should always be looking for momentum. You should always be looking for a clear path. And when you have those, and only when you have those, you should be looking for an entry area. That's your best of the best. Until you're making money consistently every day, that's your path, right? If you're not making money consistently every day on crude oil and the S&P, NASDAQ, you might as well just send the NASDAQ a check. Because the NASDAQ is going to whip your ass 38 days to Sunday. Because it doesn't move the same way that the S&P moves. It doesn't move. The NASDAQ overruns a lot. Momentum is a huge factor in the NASDAQ. And even if your entry chart has heavy momentum, it's very likely to overrun areas and take you out of trades. Guys, that 50-50 still hasn't cleared. Do you see it? So yeah, keep it easy, keep it simple. Dwight, have you noticed that we're still on the same bar on the large chart? There's the bottom of the bar on the large chart. That's as high as it could push so far. Everything in between, guys, is nothing more than fluctuations. We take our entries based on the fluctuations from the information given to us on one bar. Is this market going to go up or down from here? Does anybody know without question? I don't. That's why I stick to the patterns that give me advantages. 50-50 didn't work, Lenny. Great look. You're still inside. So, Lenny, let me ask you. And I always go back to the simple rules, right? So rule number three says that my window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Does that make sense, Lenny? So you're out just a couple ticks below, really in the window, in the middle of the window, right? Other things that I notice about this, I have 1, 2, 3 areas that haven't broken, and my window is huge, which means that I have an exorbitant amount of risk because that's below the large triggers. So I'm looking at 25 ticks of risk, hoping that three areas break. Does that make sense? I think that there's a point where you say, shit, for that sort of risk, I want a clear path. I love 50-50 trades, guys. I really do. I like 50-50 trades. Let me show you a picture. I like 50-50 trades. Dun, 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 dun. You're welcome. I like 50-50 trades. The same look that you had coming in, Lenny, 100%. Except I want that tiny little window of opportunity because I hate risking $300 hoping that an area breaks. I'm totally cool risking 70 or 80 because then if it doesn't break, I know that it wasn't high probability and I'm totally cool with it. No worries at all. Same thing. Only two lines inside of favorable large triggers, so it's easy to keep my stop, keep it manageable, and stuff like that. So I think your look was perfect. I really do. I love everything about the look. I just think that the window was so big that it creates challenges from a management standpoint on a medium probability trade. Small triggers inside the large. You don't like that. Oh, you're welcome, Lenny. It's good to see you in here. Keep posting when you need help, man. Small trigger separated from the large. I like that. It means it's strong, which means that when you have strong triggers and everything is cranking down and you chose not to take this one, you said, let's let the path break and make a little cash. Don't be fooled on red changing to blue or blue changing to red. Alan? So what you have here is a momentum trade. I'm sorry, Allie. Let me scroll up and I'll get it. I apologize. I'll find it. At the time of your entry, you're not clear at all, right? At the time of your entry, you're not clear at all. But check this out. If you let your small chart break and pull back, now you have the advantage of pulling back to a fib. Does that make sense, Alan? This is the easiest way to take these momentum style trades. Let the area break and sell a quick little snapback, or let the area break and buy a quick little snapback. Let the price bars get below and then catch it on that little pop with all that momentum. Does that make sense? And then Ollie, I sure did. I apologize. After the small triggers broke through the fib resistance, if you had taken the trade on the pullback, well, that have been a reasonable trade. So Ollie, you're going to hate it. Are your rules met? Are your rules met for a high probability trend trade? Directly into resistance. Because here, nothing had broken yet. Do you see it? Nothing had broken on that tail. Up here, the smalls are through. So right about there, you would have to make the decision to take a trade into three divergences right at a fib on areas that haven't broken. Could you have taken a trade? Absolutely, you could have. Up here, at least your small triggers were through. Down here, nothing had broken yet. Does that make sense, Ollie? You are directly into a termination condition. And here's the part that stinks about hindsight. When you see what happened after, it creates remorse, right? Oh, I should have been in that one. And you forget about all the other termination conditions that held. But do you see how your small triggers aren't through? Rule number 2 is not met. So you would have to make the decision based on momentum and a good bottom to be willing to take a trade into a termination condition. And I'm not saying that that's not something people do all the time, Ollie, but one of the things that they do when trading into termination conditions is they have some sort of clever little safeguard in place that says, I won't do it against divergence, right? Because now I have zero clear path, and I'm also showing a fight. So after the fact, this looks amazing, without a doubt. I mean, after the fact, it looks amazing. In the moment, there's no reason to believe, especially with the divergence. Let me double check. That was your most current bar, and that's after it printed all the way up. That's after it formed a complete bar to the upside. And I still have a small trigger on the wrong side of that one. And I know that it's close, Allie. And that's why I'm saying people make the decision all the time to take that trade. Um, and without divergence on the smaller chart, man, I would probably support that trade all day long. That divergence for me would be a deal breaker. It doesn't have to be for you, but I think what you run into a lot is, oh, look at that, 50-50, didn't work. Is what you run into a lot is even with odds favorable momentum, see if we can find a good example. Like even with the trigger line screaming down, when it reaches that area, let's see what it looked like at 1427. And this is where I scroll back a lot. When I'm tempted to trade in determination conditions, I start scrolling back and seeing how many times that they held. And man, hindsight will do everything in its power to get you to break your rules. Hindsight, when that market runs, you start saying, I knew it was going to run. I knew this was going to happen. I knew this. And the reality is we have no freaking idea. So there's the same idea, right? Everything looks great. It's coming off a mid-band, looking great. And that one divergence, if I was thinking with this momentum in a market that's railing down, that one divergence is enough to keep me out of it. And that's almost the same look, isn't it? It's close, not quite, but it's still a good look. And you will get to the point to where you almost anticipate sometimes, Ollie. And that's exactly what you were doing because of the strong bottom, because of the momentum. Everything was going up, and you're saying, man, this one's got a good shot at breaking it. And that's where when you start basic, right? When you focus on easy first, Ollie, your chart read was great. Like your chart read was absolute rock star. Eventually, you'll know when you have the advantages to bend your rules a little bit. Does that make sense? I hope that answered it for you. Awesome. Great picture. Thank you for posting. Thank you for posting. And guys, that's it for me. I'm going to call it a day. I'm going to go pack up the car and drive to Dallas. So tomorrow, we're coming from Dallas. Um, Thank you much. And then we're going to do it again, guys. Same thing every day. I hope you had a great day. I hope you followed your rules. If you didn't follow your rules, that's okay. I still love you. Try harder tomorrow. If you didn't post a picture today, I want to see pictures from you tomorrow. Um,